This is the briefing for Friday, July 7th. Really interesting close to the week this week. It really was a holiday week, so to speak. Volume was extremely low, especially on Monday and Wednesday. Picked up a little bit yesterday and fell off slightly in today's trading. The most interesting thing is that we opened up yesterday with a gap down based on the ADP numbers. The market didn't like the ADP numbers, they were too strong. And then, of course, we spent the rest of the day rotating back up again, as you can see right through here. This is the gap down, the move down, and the rotation back up. And this is the open on today. Actually, it's right back through here. So you can see that then we closed the gap, and then, of course, going into the afternoon, this afternoon, we had this sell-off that was really a little surprising, a little more dramatic than I expected. The spiders and the Qs certainly had much more of a retracement than the Russell and the IWM, but it's going to be very interesting to see what happens. Now, the really interesting part yesterday was that we were at a really negative breadth reading. I mean, it was 2,400, 2,500 in the on the NYSE, and the NASDAQ was 26, 2,700. Russell was fairly negative also, down about 16, 1,700. So that was a pretty interesting event to see breadth that negative and then see it recover and see the rotation back up. So yesterday was basically a day of rotation, as you can see right through there. A little bit different in the Qs, and then of course the Russell was a little bit different also. You can see more of a gap down. The Russell showed more weakness yesterday, but showed more strength in today's trading, and you can see that by the rotation down was not even close to the degree that it was in the Qs and in the spiders. Volume ticked up right at the close in the spiders, not so much in the Qs or the Russell. You can see if you look at the trend of volume in the Russell, you can see that as price moved higher, volume continued to fall off, especially going into the close today. It's about the same thing in the NASDAQ. A little bit of a volume spike in the spiders, though. Very interesting to see that. Now, what's going to be important here is that this is a daily chart of the spiders, and the market spends most of its time in rotation, and you can see that. I mean, you can see this rotational pattern here, rotational pattern right through here, rotational pattern here, and now another rotational pattern. Now, I've spoken to this earlier this week that this appears to be a double top, but once again, double tops and head and shoulders tops and bottoms are really not technical patterns until they prove themselves, and so far this double top has not proved itself. Trading below 430 in the spiders and closing below it would suggest that the probabilities are much greater that this is a double top. Otherwise, this is just a rotational pattern, at least for now. So you can see that this is really pretty important. Now, yesterday's low, we had a buying tail that came in. You can see that right through there. And today we had a selling tail that came in and drove price lower. So breaking yesterday's low is going to open up the higher probability of a test of 430. That is really a very important key reference area, very important support level, because if that's broken, that's going to suggest we're going to go down and test about the 418 area. And then it would be very, very interesting to see what happens within this area of rotation that is much greater in degree of time and price. Now, on the other hand, trading above today's high would suggest a test of the high on July 3rd, and breaking that would then suggest once again we are in vertical development higher. So really key reference areas for next week are going to be yesterday's low right around the 436 area, 437, and then today's high coming in right around the 442 area. You can see that volume dropped off pretty dramatically before the 4th and just after the 4th. Recovered slightly in yesterday and today, but really nothing to write home about. The biggest thing that happened was the extreme breadth reading. When I saw that yesterday, I thought this could be the beginning of something greater in degree of time and price to the downside. because it was so extreme. But then we recovered, and bread started to recover also later in the day. So really, it's really undecided yet as to what's going to happen. But certainly for Monday and Tuesday, Thursday's low and today's high are really important key reference areas, at least in the short term. In the NASDAQ, you can see the rotational pattern that is occurring right through here. Once again, there is a double top, but it may not be a double top. And I should point out that I think a week or two ago I pointed out a potential head and shoulders top, but I prefaced it by saying it's not a head and shoulders top until the neckline is broken impulsively, and it was never done. It was never broken, at least impulsively it wasn't. So this leaves me once again to think that, okay, a lot of people would say it's a double top and short it here, but this is a rotational pattern right now, and the low coming in right around the 356, 357 area, and then of course the high coming in right around 372, 373. So breaking those extremes in the cues would suggest a greater degree time and price move. We had a selling tail that came in today's trading, buying tail from yesterday. You can see the extreme breadth reading we got to yesterday, and then of course recovered a lot of that in today's trading. Volume trending down in the cues, but this volume reading for this week anyway may be a little bit skewed due to the fact that it was a holiday week. I don't think anybody traded on Monday, and Tuesday the markets were closed, and Wednesday was a pretty muted day. Looking at where we are in terms of the Russell broke out of this area of rotation. Now it's in another area of rotation, a little clearer defined. You can see that right through here. Tested 180 in yesterday's trading, then bounced back. A little bit of a selling tail coming in. You can see volume trending down during this time period, volume lower in today's trading, and then of course the extreme breadth reading from yesterday, and then from today, recovering very, very nicely. This led us to be extremely oversold yesterday, which suggested some type of pause, some type of rotation up to work off the oversold condition, and that's exactly what we got in today's trading. And we went from, which is very interesting, from extremely oversold to slightly overbought in today's trading. Now, typically, that would suggest the potential for some type of move back to the downside, mainly because the breadth reading was, the oversold condition was worked off in one day, basically. But I'm a little hesitant to suggest that that's a higher probability. And the reason for that is because we get moves in the morning at the open. We'll get a gap down and then a rotation up. We'll get a gap up and a rotation down. So it's going to be very interesting to see how this progresses early into next week. So looking at the some other internal components, this is the percentage of S&P issues that are above their 50-day moving average, and this is the percentage above their 200-day moving average. So you can see that over the last several days, the market has been improving slightly, a little bit of a down move between yesterday and today's trading, and above the 200-day moving average is basically the same. Now in the NASDAQ, you can see this is very interesting. This is the percentage of stocks above their 50-day moving average, and you can see the trend here. And yesterday we came right down and hit that trend line. I was waiting for it to basically break that trend line, and I thought if it breaks that trend line, then we're potentially going to see an acceleration of a move lower. It didn't happen. We strengthened in today's trading. You can see the double tops right through here, or the areas of rotation, and I really have to give it a 50-50 chance of either being a double top or just an area of rotation, and then we'll get some type of a breakout in one direction or another. In fact, I think I'm going to lean more towards the area of rotation and looking at these extremes for trade location once we get some type of a breakout from the rotational area. Interestingly enough, in the 200-day moving average in the NASDAQ, you can see that it is rotating also. So watch what happens if we break this high, which would be about 49 area, and if we break the 44 area, that would potentially give us another potential indication, at least in our probability assessments, of the next greater degree time and price move in the indices. And in the Russell, the same thing. You see the rotation above the 50-day moving average. Same thing for the 200-day moving average. So really, the S&P is the only one that is really giving us some type of move to the upside or showing more strength than the other indices. The one I just showed just a second ago, I clicked the wrong one. This is the NYSE number of shares trading above their 50-day moving average in the NYSE and the 200-day moving average in the NYSE. So really not a whole lot that's going on in terms of weakness in the market, but it does appear from these charts anyway that the strength that we had in the NASDAQ is holding, and the strength we had in the Russell is holding as well, as you can see right through there and right through here. Watching these areas is going to be very, very important going forward. Have a great weekend, and we'll pick this back up again on Monday for subscribers.